And look, you probably think the United States government is just bad with money. You watch the national debt clock spin past $38 trillion like a slot machine in a casino run by meth addicts. And you assume it's just incompetence. You assume that politicians are just stupid, greedy, or drunk on power. But what if I told you that is the comfortable lie? What if I told you that the debt isn't a mistake? It isn't a bug in the software. It is the software. The reason the debt never goes down, the reason your dollar buys less every single year, and the reason the government seems to have an infinite credit card while you are getting declined for a latte, it's because the system was deliberately designed that way. It wasn't designed by a politician, by the way, and it wasn't designed by a president. It was designed by 4 bankers across 3 centuries who realized something very simple and very dark. You see, if you lend money to a king and he pays you back, you make a profit once. But if you lend money to a government and you rig the system so they can never pay you back, you own the country forever. Welcome to the financial matrix. In this video, I'm going to show you the blueprints of the cage they built around your money. I'm going to introduce you to the 4 architects of the apocalypse who engineered the trap. And then I'm going to show you the one specific glitch they left in the code. The one back door that allows you to stop being the victim of their debt and start using their own weapon against them. But first, we've got to look at the crime scene. So let's start with the anxiety nightmare. You see, the world owes $315 trillion. That is 3 times the size of the entire global economy. So if we sold every building, every car, every stock, and every avocado toast on earth, we still couldn't pay it off. So the logical question is, who do we owe? If the earth owes $315 trillion, are we in debt to Mars? Is there a repo man coming from Jupiter? No. The world owes the money to a very specific group of institutions. And to understand why, we got to go back to 1694. Meet architect number 1, William Paterson. See, he was a Scottish merchant, a hustler, and honestly, a bit of a scumbag. England was broke. They were fighting France. Again, King William III needed money, but nobody would lend to him because kings had a bad habit of defaulting. Basically, lending to a king was like lending money to your brother-in-law who has a system for betting on horses. You aren't getting that back. So Paterson came to the king with a proposal that was so evil, it was brilliant. He said, "Your Majesty, I will get my rich friends to lend you 1.2 million pounds in gold. That is a massive pile of cash. But here's the catch. You don't have to pay us back. Ever. The principal balance will remain forever. All you got to do is pay us 8% interest every year for eternity. And to make sure you pay us, you are going to tax the peasants." This was the birth of the Bank of England. It was the first time a government turned its citizens into collateral for a loan that was never meant to be settled. Paterson didn't create a loan. He created a rental agreement on the country, and then he added the cherry on top. He gave the bank the right to print paper notes backed by the government debt. This is the moment the trap snapped shut. Money used to be gold. Now money was debt. The more the government borrowed, the more money the bank could print. So if the government paid off the debt, the money supply would vanish. So the government cannot pay off the debt. They are addicted to the drug, and Paterson was the first dealer. Fast forward to the 1800s, the system works, but it's messy. Enter architect number 2, Nathan Rothschild. So if Paterson built the prototype, Rothschild built the factory. You see, the Rothschild family realized that lending to one country was risky. What if they lose the war? So they built a network: London, Paris, Frankfurt, Vienna, Naples. They created the bond market. Before Rothschild, if a king defaulted, the banker lost money. Rothschild changed the game. He turned government debt into a product that could be sold to you. He bought the government bonds. He chopped them up and sold them to pension funds and insurance companies and wealthy aristocrats. So why does this matter? Because it made the debt too big to fail, about 200 years before that phrase existed. If the British government defaulted now, they weren't just stiffing a banker. They were crashing the pensions of the entire upper class. Rothschild made the debt inescapable by weaving it into the fabric of society. He manipulated information. He manipulated prices. He made it so that governments had to come to him to survive. He didn't produce anything. He didn't build a factory. He didn't invent a steam engine. He just sat in the middle collecting a toll on every war and every infrastructure project in Europe. And it gets worse, because by 1900, America was becoming a powerhouse. But we didn't have a central bank. We had gold. And bankers hate gold because you can't print more of it when you make a bad bet. Enter architect number 3, J.P. Morgan. In 1907, the stock market crashed. Banks failed. It was chaos. Morgan locked the richest men in America in his library and forced them to bail out the system. But he realized he couldn't do it forever. He needed a permanent fix. He needed a machine that could print money on demand to buy his bad debts. So in 1910, a group of bankers met in secret on Jekyll Island. They wrote a bill. They knew Americans hated central banks. It sounded too European, too oppressive. So they used a marketing trick. They called it the Federal Reserve System. It sounds government-run. It sounds official. But the regional banks are owned by the private member banks. It is a banking cartel with a government seal of approval. When they passed the Federal Reserve Act in 1913, they removed the last barrier to infinite debt. Now, the government didn't have to find willing lenders. The Fed could just print money and buy the bonds. Unlimited demand for government debt. Unlimited capacity to print cash. This is why you are spending hundreds of dollars more at the grocery store for the exact same cart of food you bought 5 years ago. Every dollar they print to buy a bond dilutes the dollars in your pocket. They are stealing your life force to pay the interest on a loan that Paterson started 300 years ago. And if you want to know exactly how to stop the leak, I put together a classified briefing called the Inflation Defense Manual. It shows you the specific steps to swap your leaking battery for a self-charging asset. It's free. It's vital. Go to inflationdefense.com and download it before your savings lose another 10% of their value. But there was one final problem. What happens when a country literally runs out of money? What happens when they physically cannot pay the interest? Well, enter architect number 4, Paul Volcker. In the 1980s, Mexico, Brazil, and Argentina were broke. They owed billions to American banks. They were about to default. Now, Volcker, the chairman of the Fed, could have let the banks fail. He could have let the free market work. But here's the secret. The biggest banks in America, Citi, Chase, Bank of America, were effectively bankrupt. They had lent more money to Latin America than they had in capital. If Volcker let Mexico default, the U.S. banking system would have evaporated. So instead, he orchestrated the bailout. He used the IMF, International Monetary Fund, to lend those countries more money, just so they could pay the interest to the American banks. But this new money, it came with conditions. We will lend you the cash, but you have to sell off your state assets. You have to cut pensions. You have to open your markets to our companies. This was the final innovation, debt as a weapon. When the debt becomes unpayable, they don't forgive it. They restructure it. They use the debt to strip mine the assets of the borrower. Now, take a breath. I know this sounds like a Tom Clancy novel. I know you want to believe that $38 trillion is just a number on a screen, but it isn't. The interest on the U.S. debt is now over $1 trillion a year. That is more than we spend on the military, the interest. That is more than we spend on almost anything. And who pays it? You do. Every time you pay income tax, you aren't paving roads. You aren't building schools. You are paying the interest to the bondholders, the banks, the pension funds, and the Federal Reserve. It is a wealth transfer mechanism designed to move money from the people who work, you, to the people who own the paper, them. And the scariest part, they can never stop. If the U.S. government actually paid off the debt, the money supply would shrink. We would have a depression that makes the 1930s look like a picnic. So they have to keep borrowing. They have to keep printing. They have to keep inflating your grocery bill to keep their Ponzi scheme alive. You are the battery that powers their machine. And look, I know that makes you want to curl up in a ball and hide under the covers. It feels hopeless. Matt, they rigged the game for 300 years. How am I supposed to fight the Rothschilds and the Fed? Here's the secret. You don't fight them. You copy them. They rigged the system to favor debtors, not savers. Think about it. If you save dollars, you are the victim. The Fed prints more dollars and your savings rot. But if you borrow dollars to buy a real asset, like a rental property, what happens? You lock in a fixed amount of debt. Let's say $300,000. Then the Fed does what the Fed always does. They print money. They create inflation. So what happens to your debt? You see, your tenant's rent goes up with inflation. Your property value goes up with inflation. But your mortgage payment? Frozen in place. You are paying back a 2025 loan with $2,035 that are worth half as much. The real value of your debt is melting like an ice cube in the sun. This is called inflation arbitrage. This is how you turn their weapon against them. They use debt to enslave the taxpayer. You use debt to liberate your household. The banks get rich because they hold the mortgage and collect the interest. You need to get rich by holding the asset and letting the inflation infantry, your tenants, pay the interest for you. When you take out a 30-year fixed rate mortgage, you are essentially shorting the US dollar. You are betting that the government will continue to be irresponsible. And friend, that is the safest bet in the history of gambling. But here is the immediate problem. You know what to do. Buy assets with fixed debt. But you can't fight a financial war without ammunition. And right now, the banks know the storm is coming, and they are tightening the lending standards. They are hoarding the cash. If you wait until the crisis hits to try and get a loan, it will be too late. The window will be painted shut. You need to secure your liquidity now, while the system is still functioning. You need to build a war chest of capital that the banks can't turn off when the market freezes. And that's why I pulled this video out here for you to watch next. It breaks down the offense side of the strategy, specifically how to access loophole capital at 0% interest so you can start acquiring the assets that short the dollar without putting your own home equity on the line. You'll see how to stress test your liquidity in this one right here. So click that, and then I'll show you how to get the money before that window closes.